Hello traders, welcome to another daily analysis. Today is October 20th, Thursday. Now let's just get into it. I had some intraday trade today that I like to sort of demonstrate to you and explain to you. So let's just get into the quick analysis first. So fundamentally, we have the last Asian session, the very disappointed employment data coming out from Australia. Now it was largely negative, actually, out of people's surprise and expectation. So of course that is doomed to drag the Aussie dollar down, stop the the continuous uptrend for the past 6 days. And moving to London session, of course, we saw the first slightly negative retail sale data from UK, but it's not really a big surprise. It's not a deviation. And also, it's not really important data per se that people are taking a look at. Basically, as I mentioned, right now, everything coming out from UK will be largely sentimental. That means that people will pay more attention to the politics and the ongoing progress of the Brexit, and whether the court decision come out to say that they have to go through the parliament or not. That will be the main focus in the market. And other data would not really play much significance at this moment for UK. Now moving to New York session, of course, the biggest news is the ECB rate and conference. Now rate, of course, as expected, came out at 0%, but the conference was an interesting one, and that was the one I trade for. Because the conference, there's two major factors that traders are waiting for. First is that whether there's going to be an extension for the QE program. And second is whether the rumor for tapering is real or it's just a rumor. So these two things, taking into factor, cause a lot of volatility. And if you're doing any intraday trade, that's exactly the sort of environment you want to be with. And another two data coming from US is really not that important. And also the market, last night the debate, market was the poll will favor Hillary Clinton. So again, right now we have 3 debates and she won all 3 debates. Looking out, the sentiment is very positive for the US dollar at the moment. Of course, we have to see the result of election. This kind of thing, you never know until it is done. Now, sentimentally, you see the oil market closed down today, but still above $50 per barrel. And equity market will mix with European closing positive and North American closing negative. So sort of mixed day, doesn't really have a clear long-term direction, but let's just get into the chart and then we can explain more. So first thing first, let's take a look at our daily chart. We're still holding Euro Aussie at this moment. But as mentioned, we did have a big reversal. It's not because the euro gained any strength. On the contrary, it's because Australian dollar lost a lot of strength due to a weak employment data. Now, you have to look at the big picture of why the data will cause such a movement, because not all data are equal. What happened is you could look at the policy statement from central bank and it will tell you exactly which data that they are looking at the moment. Now, last year, RBS statement saying that they are actually looking at the labor market. So, the inflation is always important for them. And the second thing is GDP, and the third one is employment data. And then they actually stress that if the labor market is still weak, then they are thinking to further easing. And that is the negative news for Australian dollar. And then later on, you have that today, last Asian sessions, a very negative, deviated labor market data. And of course, that is going to send a strong negative sentiment into the Australian dollar. Now, personally, I am still holding it, but as I say, I already tightened my stop loss at above. It is just slightly below 1.45. And this is a very strong swing point. So if you get stop out, then most likely the trend is going to be reversed. But I'm still quite faithful because I know euro dollar also has a very negative strength at this moment. And if all things are equal, negative versus negative, I do think Australian dollar still has a better upside than euro dollar. So I'm thinking this is really just a short-term rebound. It's not really a reversal, it's just retouch. So we'll see what happened tomorrow, Friday. It's going to show a lot of trader, institutional trader, or big trader, hedge fund trader don't like to carry position over the weekend. So Friday closing will give us a more hint as whether what's gonna happen next week. And of course, we have to see what's coming out next week. If there's any significant events that's going to completely change the direction. And let's go over the daily chart first, and I'll go over the intraday trade which I have today. So again, just take a look at all the euro pair first. The euro pound, again, we have a down day for euro dollar, and no surprise coming out from the Draghi ECB comment. Euro Swiss also a down day. Euro dollar also a large drop again. Look at we broken down to another new low, which was, last time we were here was June. So right now, of course, this 1.0912, this basically 1.09 is going to be providing very strong support. If it breaks, then it's going to keep dropping, but we will see what's going to happen. And Euro Aussie, again, just look at that. Euro CAD was actually a strength more into euro dollar than Canadian dollar. First of all, you're looking at oil market, of course, it's a down day. And second of all, the last, I think Wednesday, the BOC comment also is quite dovish, quite negative. They're saying they are also considered easing. So you have two negative sentiment in these two currency. And then it's really just depend on, basically, in these kind of things, I don't really like to guess in what direction it's gonna go, because you really don't know. Then if you don't know, then it's most likely just the price action itself. So I actually don't know which one is stronger. I mean, for today, yes, euro dollar did have a better strength than Canadian dollar. But if you're looking at the candle, you say that it's not really a winning battle for seller, because they were trying to it's not really a winning battle for buyer, because they were trying to push up all the way here and they fell down miserably. So yes, we did close higher, but it's not a significant strength or a signal to telling us that euro dollar is stronger than Canadian dollar in technical analysis. Now, in fundamental and sentimental, we also don't have a clue. So at this moment, I don't know. If you want me to pick, I'm still favoring Canadian dollar, because the oil market is still looking upside. The Canada economy is still doing better. They also still have a higher interest rate, and we are still in a quite a risk-on sentiment environment at this moment. Of course, if November the election come out as a win for Hillary Clinton, then this risk-on sentiment will continue. So if that's the case, then the Canadian dollar is going to have more strength than euro. Look at the euro newsy today. A sort of neutral day, a euro yen, really a range bound at this moment. So I don't see anything to enter daily wise for euro. Now, pound Swiss, again, we are all at this ranging area. You see, very small candle, very small price action movement. And as mentioned, although British pound is looking negative in their long-term fundamental, but market is looking for a new piece of sentiment, a new piece of information to short it. As long as we don't have that, then it's hard for the pound to be pushing lower. Swiss yen, again, ranging bound. Dollar Swiss franc, another update for US dollar, and a down day for Swiss franc. Of course, be careful. As you see, we are still just all trading around this ranging, all below this very quite strong resistance right here. So we'll see if we can push further and maybe touch down again for breakout traders. But for me personally, I'm not really interested to take any trade at this moment. Again, there's no new information, and we are not at a level that is low enough for me to buy. Dollar CAD, again, yesterday I was saying that it was a very tempting trade for me to get in. Now, I didn't get in at the end, and the reason is because Actually, I don't even remember the reason. Let me get my trading plan out, and we'll go over that. Very interesting, every time you enter a trade, it is essential for you to have a habit of writing a trading plan. And it's just a journal of your thought process. It's really going to help you in this trading career to further understand what are you thinking psychologically and what can you learn from it. So for example, last night I say I might enter this trade and at the end I didn't. So let's see what was my thinking process. So I say it was not a good timing to enter right now, right? We say rate decision come out, it's quite dovish, but still, US dollar is supposed to be good. We have been the range bound. The risk is general. I say, okay, right here. I said, no, I decided not to enter it because the risk is too high and the reward is not good enough. Okay, so basically Friday, which is tomorrow, there's going to be another CPI data coming out from Canada. And I know that the BOC is looking at inflation as their factor and also labor market and of course GDP, the three main characters for microeconomy. Now, if the CPI data coming out from Canada tomorrow, if it's negative, then yes, we are looking forward to buy dollar CAD. If it's positive, then our position will be in trouble. So basically, that's why I don't want to enter. I didn't enter because we have a important fundamental data that's coming out tomorrow that might change the fundamental direction of Canadian dollar. And that's why I didn't enter it fundamentally. Now, technically, it's because I also think we don't have much reward upside as looking at this trade. If you're just looking at a candlestick itself, one-on-one, you're not even have one-on-one up to this upper resistance. So for me, technically, we are not low enough for me to buy. And sentimentally, yes, we do have a good negative sentiment into Canadian dollar, so we could buy dollar CAD. However, fundamentally, there is going to be a CPI data and core CPI data coming out from Canada tomorrow. So that is a risk event that is too big for me to enter any daily trade. So I was saying that I am going to trade that event tomorrow. So if it's a negative deviation for Canadian dollar, then I'm going to get into dollar CAD and perhaps holding it over the weekend. Of course, I'm gonna see what happened tomorrow to further elaborate my plan. But that was the reason I didn't enter it, and that's why it's very, again, I'm not always right, of course, and then sometimes you are going to miss trade, and that's just a natural of trading. You are really doing the probability game, so of course sometimes you're going to miss a lot of trades, but essentially you are training yourself to think independently. You are training yourself to think in a broader terms. And that's really going to help you a lot, not only in trading, but also outside trading in your daily life. Look at dollar yen. Again, another range bound day for dollar yen. Now look at Aussie Swiss. So basically we are going to see all down day for Australian dollar. As mentioned, it's because the very disappointed employment data from Australia. So look at all this down day. But if you ask me whether I am looking to short it, no, I'm not looking to short Australian dollar. Maybe against New Zealand dollar, like this one may be a good choice, but definitely not other thing, not versus other pair. Aussie dollar might be a good one, but again, I don't like the risk reward. It's just too close, right? It's not high enough for me to short. And all other things, Aussie yen, Aussie CAD, I don't like to short into a stronger currency. For example, Aussie Swiss. If I want to short Aussie Swiss, that means I'm going to sell Australian dollar and buy Swiss franc. But fundamentally and sentimentally, Australian dollar is so much well supported. So this is just a short-term rebound. We are not even breaking below this trend line. So for me, I don't like to play this kind of trade in daily, because daily I really won't have a long-term perspective. This is more a swing position. You're looking to hold actually for as long as you want, providing if it's going in your direction. So the only thing, maybe Aussie Newsy. And the reason is because, first of all, we already broke this uptrend, right? And then we broke down, we tried to basically test the upper support, the upper resistance at 1.07. and we're gonna test again, and we fell down today, and that was already a very good signal. Now, this is a very good point for you to put your stop loss as well. We are at a good level, good position for short because we have a lot of downside. The only risk just by looking at this is New Zealand dollar itself, because as mentioned, the RBNZ meeting is coming out in November, and that might be a risk event gonna reverse all the directions. Of course, I'm gonna do more analysis later on after I finish the video, and then tomorrow we'll see if I did enter this trade or not. Let's moving forward. Cash Swiss, we got a down day for Canadian dollar because we have a down day in the oil market. New Zealand Swiss, New Zealand dollar, you know, nothing really on my radar at this point. And New Zealand. Now I'd like to take a look at the commodity pair. Just give me 1 second, because I didn't know why we have a down day for oil. So perhaps there was some progress in OPEC, and that, if that's the case, that might be significant for us. Let's see if I see anything today. Don't see anything yet. Let's see, commodity market, commodity news. I'm actually using my other computer right now. Iran oil tenders near, investors still in the dark on terms. Okay, so nothing significant. It's just, you know, basic price action rebound because of the resistance. Also, we don't have any. We still don't have quite too much details in the terms from the OPEC, and that, you know, uncertainty maybe provides some pressure into the oil market. All this just possibilities, but nevertheless, I just want to know if there's an important news that's gonna drive the market. Okay, so basically that's the day trade I have for today. So really, if anything, I'm more looking forward to enter Aussie New Zealand, and fundamentally New Zealand dollar was weak than Australian dollar, but now since the employment data came out very disappointed for Australian dollar, then providing they might easing, if they are going to ease and New Zealand dollar is going to ease, then they both are in the same negative sentiment, so they hedge out each other. On top of that, they are all commodity pair, which the risk sentiment will also be hedged out. So these two things are already giving you a pretty good, you know, tone of that they are not risky for if you want to short or long these two pair. Now, providing sentimentally, you know, we have more negative news, just fresh negative news coming out from Australian dollar. And providing fundamentally, you know, they both are very similar. But if you're looking at the yield, then yes, New Zealand dollar has a slightly better yield than Australian dollar, but not that much. Okay, let's take a look at that. They are 2%, Australian dollar is 1.5. So it's not that much. So the only thing that's really triggered my interest would be this, you know, position, which is high enough to short, as we are at this congruent area is 200 EMA resistance. We have a trend line broke down. We also are high enough for our risk reward. So those are quite attractive element for me to thinking about going short. Okay, so today I said I was doing an intraday for euro dollar. So originally I was not my plan to get into this. The reason is because I don't have the instant news service for press conferences. So if I don't have the fast enough information, now people may ask, say, what does it matter? Well, it matters very much if you are doing intraday trading. You gotta understand you are against some of the best institutional trader in the world with the best equipment and information. So that's why I really focus on daily trade for a lot of you guys, is because as a small time retail trader, and when I say small, I don't mean, you know, bad. I'm just saying that's the fact. As a small time retail trader, you have a better chance to win if you're doing a more swing style daily trade. If you want to compete doing 1 minute, 30 seconds, then unless you have a, top end equipment, your internet connection is fast, your equipment is fast, you have the best premium news service. Otherwise, your information is always going to be lagging. And don't take my word for it. Next time when the news come out, you look at the market, you will always realize how come when the news came out, before you even receive it, maybe from Forex Factory, the price has already moved. And people always think that, when I first start, I always hear rumors say, oh, it's a leak, oh, it's not fair. Actually, it's not a leak. It's just because they have a better premium service that is available to anyone who is willing to pay top dollar. Now, when you first started, of course, you don't want to pay $3,000, $4,000 every month just to have a Bloomberg a platform. So that's why if you want to trade 1 minute, 5 minutes, and you want to trade these kind of news events, press conference events, you really need to have a good premium news service, and that will actually increase your odds. Otherwise, you do as what I do, you have a relatively bigger stop loss, because a lot of traders, when they do intraday trade, they have 5 pips, 10 pips stop loss. I still use 100 pips when I do intraday. That doesn't mean I only get out when I lose 100 pips. That just means that's my buffer. That's my buffer because I know I don't have the best premium news service compared to top institutional trader. So I want my buffer to be large so I don't get whipsawed. That means I don't get stopped out by this fluctuation. That's the first thing. Second thing is I always try to become, basically I don't hit and run. I wait maybe for 5 minutes after news to see if it goes to certain level, and then I'll get in. Sometimes I jump in. It's all depending on scenario, but it's not a very stubborn system per se. It's really depend on the environment that you are trading. So for that being said, of course, I got in at this candle, okay, and I got in short at 1.1022. So I got in here at relatively high position. Now there's few things that I want to sort of a lesson for myself today. Of course, is that you are never going to sell at the highest high and buy at the lowest low. So just understand that and get over it. Because when people go into this market and always thinking that, oh, they are not getting the best field price action, they are not getting the best position at the best price level. And that's for sure, because nobody can buy at the lowest low and sell at the highest high. What you want to do as a trader is to try to get the meat of the action. The meat of the action. That means if you can grab anything in this area, that's already good enough. Who cares if you lose this, this area? Who cares if you didn't grab this area? What you want to get is this meat of the action. And once you get it, pat yourself on your back. That was a good trade. But don't get, stuck into this, oh, I didn't get the best feel at the best, because you're never going to do that. That's just a fact, right? In this game of probability, that's just a fact. You are never going to buy at the lowest low or sell at the highest high. So anyway, I got into here, but there's few things I did. First of all, usually my stop loss, as I mentioned, was 100 pips for buffer and 50 pips for real stop loss. That means I'll enter the trade with 100 pips automatically stop loss, right? I use parent order. That means my order automatically carry 2 other orders. One is a profit, one is stop loss. And that's just to train myself, don't second guess myself, right? A lot of people say, oh, I'm going to get out if it hits certain level and all that. If you are beginning trader, don't try to play this kind of game. Try, let the technology help you, because you are going to stuck. And I'm telling you, getting out is just a click of a button, but the psychological barrier is so large that people are waiting to let a losing position run until their account is ruined. And sometimes you're asked, how come this happened? Couldn't they just get out? Don't they know that's the rule of thumb? Well, you will know why when you are in the market is because you are your biggest enemy. And that psychological barrier is just so large. As long as you cannot trigger that click of button, right? So I certainly was like that when I start out my career. So right now I still have this habit of just using an automatically order so that I know I have to put a stop loss no matter what. So anyway, my stop loss normally is 50 pips. So normally it will be at 1.1070 around this area. But because I know that I don't have the premium news service, I don't have the best information, I also don't know what's going to happen. And again, this trade I was not even planning to do, as mentioned in my last video, because I don't like to get into the trade that I don't know, that I have to interpret the result, right? I more like to get into a trade when it's a factual base. So, but I got in just because this huge upside action, and I was looking at the press conference live. It just, I know that I'm even the live press conference from Bloomberg is delayed. Okay, I don't know if you guys know it, but that's delayed comparing to the premium service, the one you get from Rain Squawk, the one you get from Reuters, the one from Bloomberg, the one from free stream news media is always delayed. So I know I don't have the best service, so I don't want to risk my normal position. So I actually tighten it to 1.42 right here. That was my stop loss. And as you can see, I was so close to get stop out. I was 3 pips to get stop out. And that was fine with me because I rather tighten my position, use half of what I usually risk, if I'm not sure. So you see, the way I trade is always depend on how much risk I have. And that's really the critical point to differentiate a winning trader and losing trader is that, or investor or anything per se, is that most people only looking at the profit. They're only looking at the greed. They only get excited. They're never thinking about how are they going to mitigate when they are losing. How are they going to control that uncertainty? And that's a very important thing. Once you get master in that, you are on your way to become a professional trader. So I tighten my stop loss. So essentially this range, that's my stop loss. And of course it goes down, and then I got out at 1.0970 right here, 72. Now, a lot of people was that's the result of today. So of course you see I got a pretty good risk reward ratio, almost more than 2-to-1. But I want to share this psychological reason. Okay, I actually write down my thinking pattern. Again, just have this habit of journaling your trade. It's going to be so valuable for you later on. So the thinking pattern is very interesting. You got in a trade at this area. You almost got stop out and now it's working your way. Now, getting into a trade is perhaps the easiest part in trading. The difficult part is always the management and the exit. Now I repeat, getting into the trade to buy or to sell, that's the easiest part. The most difficult part is how do you manage it and when do you get out? Now, if you get into a trade, you get stop out, that's actually the easiest solution for you because there's nothing for you to think about it, or you're out. However, what happens is when you are in the drawdown or when you are in the profit, and that's where your psychology kicks in. For example, if you are in the drawdown like here, what's going to happen today? You start second guessing. You're saying, oh, maybe my stop loss range is too close. Maybe I should just move back to my original stop loss, the one I usually use. Oh, but I say I'm going to tighten my stop loss. And then you start having these different voices in your head. And that's just very natural. And honestly, both are right. Because it's really depends on how you're going to trade according to your personality. So if today I get stop out and everything still work out like this, I'm fine with it. Because that's just my personality. That I don't want to risk too much when I don't have enough planning and information. That's my bottom line. That's my principle in trading. So if I get stop out today and lose all the profit, that's fine with me. But if I move my stop loss to this, I give myself this kind of large risk, and I also profit, it's not a good trade for me because I'm broke my own principle. And a lot of people say, oh, but it's just one trade. You have to understand trading is a process for you to build habit. So every time you break a habit, you actually making yourself sending a signal to your brain to telling you that, hey, this bad behavior is actually my habit. And what's that gonna do is you're gonna see a lot of chronic loser. Or if you go out there, you see a lot of chronic gambler. And if you're looking at them, you say, why are they gambling like that? Why are don't they understand that this is a game they're going to lose? Why are they keep coming back day after day and risk all they have? It's because they're already setting up a habit of a habit of damaged behavior. So you have to be very careful every time you're doing the trade. And the most important thing is you have to follow your plan. The outcome is not important. You have to follow your plan, and every trade counts because every trade is an opportunity for you to set up a right habit. And your right habit eventually is going to bring you the right direction and the right action and outcome that you desire. So that's why never ever break your habit or your principle and thinking that, oh, it's just a one trade. If you follow your plan and you lose money, that's a good trade. If you don't follow your plan, I don't care how much money you get or how much money you win. That's a bad trade. And I know for sure you are going to lose in the future. You are going to get busted because I know you're already setting up a bad habit for you. And this kind of lesson you're only going to learn when you are in the market for long term. Because if you're a short-term trader, you just got into the market first beginning, you're always going to get attracted to how much money people make. And nowadays, I don't even care how much money people make. I care how long are they surviving in this market, because that's the key. At the end of the day, you want to survive because this is a career. So anyhow, I got into a trade, and then I start getting a profit, and then that's the management kicks in, and that's where you start getting all this kind of hard management. You start guessing yourself, because then what happened when I have 1.1005? What happened here? Well, this is a strong support because this is a wrong number. This is 50% of this candle, and this is a nice support area. So should I get out? Well, that was a voice in my head. I already have one-on-one. Should I get out? Or maybe should I move my stop loss to break even? Now that's the thing. It's constantly always going to be in your mind. And the thing is, if you're looking at this hourly chart, you wouldn't get too much picture. So if you go to, like, say 30 minutes, or if you go to 5 minutes, you'll see why you have this kind of reaction. Because you see, this is the news candle. This is the moment when Draghi say that he's not looking forward to extension of QE, so he heats up. And then he said that, the rumor of tapering is in fact a rumor. All in the market, sell it. And then you got in, very good, you're happy. And this is really the candle that you are worried. Because now you are like, okay, I'm here. I got a one-on-one. But I say that my principle is to get at least 2-to-1. So should I get out or should I stay? And should I tighten my stop loss to break even? Or should I just do nothing? And that's the kind of thing, it's really hard for you psychologically to make a decision in this kind of short time frame. Only very few career and job that you have to make a decision like that in such a short time frame. Or like a military, or like soldiers, or like people doing those kind of life and death situation. You really have to make something. And again, losing money or making money is sending the exact signal to your brain as if life and death. It's the same dopamine. It's the same thing. So That's the hard part of management. You're like, oh, maybe I should wait. And then of course, trading the market for a long time myself, of course I wait. I'm fine with, I'm completely fine if this position turn and stop me out. Again, because I follow my plan. And if today I got out here, I'm not fine. I'm not happy. So then it keep going down, and finally it hits our target. But then again, you have another voice coming in. You're like, oh, but should I just let it run more? Because maybe it's gonna go down more. And that's again another second guessing for you. So of course I follow my plan, get out. But then the third guessing comes in is that after you get out, you all have this habit that you still want to see what happened. You want to know if you're leaving too much money on the table, or you want to know if you got out at a perfect position. And in my case, look at that. I leave pretty much a big chunk of money on the table. Now, does that upset me? It used to. I used to upset me greatly because I used to be drawing this line and like, oh, I could have made 5-1 instead of 2-1. But what happened is that, again, you're never gonna sell at the lowest low. How do you know you're still here? How do you know you are that great? The thing is, you don't know. And then if you are always in the market and always always changing your opinion or your plan in accordance with the actual price action, then you are really just playing a gambling game because you don't have a plan. And that's what happened to a lot of traders. So for me, I have no problem, absolutely no problem to not getting this middle of action. I did leave money on the table, but the thing is, I don't know. According to my plan, I say 2-1. That's good enough for me. And then when I have 2-1, it keep dropping, but then in reverse. So how do you know it's not gonna reversal? You never know. And sometimes I want to make something very clear. Sometimes I don't follow it blindly, right? Sometimes I did hold on more, but that really depends on how convicted I am to this trade. No, because I don't know, I'm not really that convicted for intraday trade. For intraday trading, I just want to get in and get out. But for daily trade, yes, I would like to hold it. So intraday trade, I don't have a bigger picture. I don't know whether there's going to be another positive news coming from euro. I don't know whether there's going to be negative news coming from dollar. And most important thing is that I don't trade this with this time frame only. I actually, prior to the trade, I will always go into a daily chart to see the bigger term. So today we were here at this area, right? So for me, we are actually already at the lower support. We are at the bottom. So for me to get out at 1:0975 was actually the support, the lowest low compared to before. So of course, I do not know it is going to make a new low today. That's why with the limited information I had at the moment, I made the best possibility for this trade. And therefore, I am happy because it is a good trade. And that's what you want to set up a good attitude for yourself. You don't want to come and say, oh man, I missed this action. You never know if today is the day that's going to make a new low. You have no control. So understand a thinking process in terms of trading is very important. And you're always going to have this kind of voice of doubt when you are in a trade managing it. And that's just, it's always going to be there. No matter how long you can trade, what you do, what's going to change down the road is just you are better at ignoring it. You are better at sticking with your plan. And that's it. But you're always going to have a self-doubt. And that's just fine. That's just the nature of human. So basically, just to share this with you. So yeah, it is a winning trade today, but most important thing is that how do you actually plan a trade and follow through? And that's really what's more valuable for you to trade. Even if you are paper trade, that's a more valuable lesson. Okay, so tomorrow, Friday, last day of trading, I think we have again Canadian core CPI and CPI. So this is a Canada day basically tomorrow because that's the only important data. And of course, you have BOJ government core that speaks tentative. We don't have exact time. Most likely, he is going to say something about the yield curve or quantitative easing, things like that. I don't expect anything new, but they are trying to, of course, always trying to talk down the market. But right now, yen is pretty much going in their direction, right? So I think they are actually pretty happy of what happened now. But of course, yeah, I think yen is quite weak recently, so it's good for Japan because that's what they want. They want the currency to be lower value for their export. So that's why I don't expect too much for that speech. But nevertheless, so I'll come back tomorrow, and if we have another Canadian dollar intraday trade, I will demonstrate for you tomorrow of my my result and of course my process. All right, other than that, thank you very much for watching. If you have any comment, feel free to let me know. Otherwise, safe trading. I'll see you tomorrow. Bye bye.